to trade. Oh, hello. My computer audio was muted before, but let's restart that. Welcome to the Trade Alpha live stream. Today we're trading the E-mini S&P 500 futures, ticker symbol ES. My name is Dan Munro, aka Dan Omen, and I am a pro futures trader with over 7 years of experience, and 4 of which have been profitable, the last 2 of which have been over 6 figures profitable. And I am here today to kind of just give a little bit of insight and share my process for day trading. I utilize primarily a price action based futures scalping strategy, but I also do on occasion trade a form of mean reversion where I'm looking to scale into positions and ride it back to retest the average. Usually I'll use a 180-day average or 55-day average. So the 180-day is a simple moving average, or if I'm going off of a exponential moving average, it's either 55 or 21-day. For my price action scalping, I'm only looking at the 20 or 21-day exponential moving average, but that's just a guide. I don't actually ever take any trades specifically off of that moving average. What I'm looking for in my price action strategy is specifically, as it's said in the name, I'm looking for a specific price action. So I'm looking at each candle, each bar, to see what happens, and I'm analyzing setups based on what's actually happening in the price. I don't use any fancy indicators or anything like that. I'm specifically looking at the price. So right now I'm kind of waiting to see if we can get a setup for a reversal, and that would consist of 2 triggers and then an entry. And those triggers are what consist of a 2-legged pullback. A 2-legged pullback is when something is in a bear trend or a bull trend. In this case, it's a bear trend. I'm looking for a strong bull candle that breaks out to a new high above one of these prior highs, and then from there I'm looking for a potential pullback, and then a confirmed support above a higher low. So those are the 2 legs that I'm looking for, and then after that, subsequently, I'll be placing a stop market entry above the new high, just like 1 tick above the previous high, and we'll see if we get filled. I'll have very strict and tight risk control on this, considering the fact that I do believe that the overall momentum today is bearish, and that if I do get into a long position, it will only be for a few points, after which point I will then be looking to catch a trend resumption trade and go short. Because I believe it's obvious at this point that the momentum and overall sentiment of the day is bearish. But with that said, I also do think that there's a good chance that, considering how in the green it started out today, that I think there's a good chance it may try to come back up into the green and retest these prior highs. So it's a good chance for a bounce, in other words. But who knows? It could continue to go down. In either case, I will be trading what is in play in front of me, and I will not be allowing any of my biases to kind of dictate where my trades go. I'm going to be trading the setups in front of me, and I intend to be in a position to profit either way. So without further ado, let's get into it. so here's the 1 minute, aka the short-term chart. Next to the 1 minute chart, there is a 15-second chart, and a 15-second chart is mostly just used as a reference, so I'm not really making trades off of it. All right, so throughout the course of this live stream, there may be some, extended periods of silence potentially, but, I mean, there's not action at all points throughout the day, but I'm just basically hoping to use this live stream as a reference point that other potentially new and aspiring traders can kind of keep playing in the background. And, if there's something really like in play or some action happening, then I'll check in and kind of give updates throughout the course of the day. And afterwards, at the end of each day, I'll be giving a review and kind of go over some of the setups and price action. I also, at the end of each day, I save a copy of the charts and I kind of review what potential setups I missed and just kind of keep sharp in terms of being able to identify setups. So as I'm speaking right now, there was actually a setup that I missed. There was this breakdown right here. So what I should have had is I should have had a stop market sell right here, and that would have caught all of this right here. So if I had been paying attention, I would have caught that. But that's okay. So yeah, the momentum here is extremely bearish today. I mean, wow, this is crazy. I'm glad I didn't try to preemptively buy into this consolidation here, expecting a gap up, but that's why you have the two-legged pullback setup. It requires your initial trigger and then a confirmation of that trigger prior to placing any entry orders. So it kind of has that extra layer of protection, that extra step in order to protect against, quick and rapid resumptions. A large percentage of reversals intraday will fail. However, with that said, there is some form of intraday reversal approximately 80% of the time. So 80% of days will have some form of reversal, especially on trend days and stuff like that. When you're in a trading range, naturally that's not exactly what we're talking about. In a trading range, there's many reversals, many double tops and bottoms. But with this, as you can see, there's clearly a trend, and there will be an 80% chance at some point today to see a reversal of some form. Now that reversal may be very small, but it will be tradable and you will be able to make profits off of it. I also want to just kind of get this out there before we proceed any further. Please do not copy my trades. This is for entertainment and reference purposes only. Just because I'm taking a trade on something doesn't mean that you need to jump in as well. I have my own unique risk reward profile. I have my own unique style of trading and my own reasons for making specific decisions. People need to assess and analyze their own independent situation and make determinations on their own as to whether or not they want to risk their own capital on any given trade. So please do not copy my trades. I am not liable for any losses that result from following anything that happens on this trade. Any statements or like advice I give on here is purely for entertainment purposes only. I am not a registered advisor or legally speaking, I am not legally able to give any investment advice. So please don't sue me. With that said, I do hope that new and aspiring traders can kind of learn how I go about managing risk and learn how I kind of approach analyzing markets and assessing whether or not a given setup is worth taking or not. Because that can be one of the most difficult hurdles to overcome when you're first starting out in trading, is really knowing when to trade, when not to trade, when the market is conducive to your style, when it isn't. That was one of the most difficult things for me to overcome at the beginning. Is I would go on, a streak where I'm perfectly in sync with the markets, and I'm making money hand over fist, and then there would be a couple days where the market's just completely non-conducive to my style. There's no real good setups. There's traps and a bunch of stuff just designed to screw me over, especially in my style of trading. And back at that point, I was not capable of scaling in or doing any other tactics to kind of avoid taking losses. So I would just eat loss after loss after loss, and then I would revenge trade and really just get very frustrated and compound my losses as a result. So I'm hoping to kind of give some insight into how, now that I have a much more refined edge and much more experience under my belt, and I'm able to identify quickly when there is potential traps in play, or if the market's range bound. I can identify these things very quickly, and I hope to be able to kind of convey my own process to anyone watching this stream. So in future live streams, I will get more kind of formalized with this live stream. I apologize if this is kind of sloppy at any point. I'm still kind of messing around with the settings on my streaming software and kind of just getting the hang of it. So please bear with me if there's any technical difficulties or anything that seems kind of sloppy throughout the course of this stream. I will get better, and we'll start getting this more formalized as the days go by. Also, if anyone's interested in joining a kind of social media group, we've got several hundred members so far, and I'm always posting daily callouts as well as more thorough analyses on more than just day trading, because I also do investing and swing trading. I have a IRA account that I use, and I also kind of share like how I do my portfolio allocations on the Trade Alpha Facebook group. So do check that out if you get a chance. The link is in the description.
Slow computer.
Also check me out on Twitter. Both the Trade Alpha Twitter and the in my own personal Twitter. You can find also my own personal Instagram where I share more stuff having to do with my lifestyle and more personal stuff on Instagram at Danomun, Danomun. And so, yeah, please do check me out on all social media. And if you find anything useful or helpful having to do with this stream, please do like and subscribe.
Slow computer.
That would be very helpful and very much appreciated. Okay, so
Slow computer.
we've got a reasonably sized bull bar here. Let's look at the 2002 chart. Okay, so what we could see here, even though, oh, and I forgot to mention that a two-legged pullback does not necessarily need to have all of these conditions met. There are certain exceptions, but I wouldn't really advise people to, at first, beginners to really kind of make these exceptions on their own. Certain exceptions could potentially include an extreme high volume bull bar. Some of you that have been watching the market throughout the past few days may recall, even yesterday, there was a downtrend and then a massive bull candle that broke out of the downtrend. Now this bull candle gapped up, pulled back, and gapped up again extremely strongly, and that was the point at which I actually had my stop market entry long position filled, and then it did immediately pull back and retrace almost that entire move. So I ended up down almost 10 points. And in order to save myself from that, I actually entered. Again, I scaled into the position with a subsequent limit order. And that actually lowered my cost basis down by half. And so when it actually resumed back up, I also doubled my profits. So with that, I had a stop loss set naturally below that previous low. And since it resumed back up above the previous low, I knew that I was good to go and that it was moving back up as expected. So sometimes volatility will hit when something rapidly reverses back up. There is a very good chance. I can't tell you the exact statistical odds, but there is a good chance that it will pull back and try to retest that previous low. So that's why patience is key here, as well as knowing your risk reward before entering. So you have to really, sometimes with these price action moves, you have to be willing to take an initial loss sometimes. And the important thing is to not get shaken out, but at the same time, you don't want to hold it longer than you need to in the event that you're wrong. So it is a very delicate balancing act, is knowing when to hold and when to fold, really. All right, so we're looking at this here. I may actually...
Slow computer.
Order submitted.
Set a stop here. See if we can get... We'll do it two ticks below. So we'll see if this triggers. If it does, that'll be a nice resumption down. But if it doesn't, and it gaps back up above this level here, then I think we will be looking at a potential start of a two-legged pullback reversal. So we'll need a gap above this need a bull bar that pushes above this, ideally above this as well. And then we'll wait to see if there's a pullback. And if there is, we will set a stop market entry above these levels here. We'll do this level just to be safe. So if it gaps up above here, and then as it pulls back down, we'll put a stop market entry 1 or 2 ticks above that previous high. Oh, I apologize if there was a bunch of feedback noise before. I just kind of realized I had the fan blowing like right on where the microphone was, so hopefully it sounds a little better now.
Slow computer. Slow computer.
So as you can see here, I'm catching a quick scalp. I would not advise anyone take anywhere near the same type of trade. So yeah, I'm just kind of messing around here. I have multiple
Order
different
filled.
accounts, so we'll see what happens here. I'm essentially hedging between two separate accounts. Yeah, so as some of you might suspect here, my strategy has shifted from price action scalping to mean reversion. I believe that the market has come down far too sharply and far too quickly. So on one of my accounts, I'm trading mean reversion, which involves extremely high risk reward here. So I would not advise anyone that does not have a lot of capital to trade anywhere near this type of strategy, because I'm going to scale into up to 50 contracts here. And I'm going to just keep buying until eventually it turns around. So as long as you're buying, like after the market has sold off this sharply, my approach to scaling in will allow me to
Order submitted.
allow it to
Order
eventually
filled.
like push back up above my average cost basis. That's the thesis behind it, of course. It doesn't always work, but some of my largest winners have essentially played out this way. So if anyone's wondering, like, what the hell is this guy doing, buying such weakness? You know, he's taking huge losses. No, well, I haven't taken huge losses quite just yet. I've scalped in and stopped out a couple times, but at this point, I'm pretty much committed to scaling in until I see this through. So I would not advise anyone like do the opposite of what I'm doing if you're a beginner. And so I'm sure there's money to be made going short, and That's actually what I did on my other account here. And I just pulled 485 off of that. And hang on, in just a minute, I will bring up my P&L of the day.
Order filled. Order filled.
See, because what's going to happen here is it's going to keep pushing down and down and down until eventually some big whale steps in and retraces this entire thing back up to probably around 4,005. Like the moment it dropped below 4,000, I knew that this was an overextended move, fueled primarily by panic. And I knew that it would eventually retrace. So this is a mean reversion strategy for only the most
Order submitted.
the most
Order filled.
capitalized and experienced traders. I would not advise anyone else to deploy this type of
Order
strategy.
filled. Order submitted.
Really? Also, I want to strongly
Order filled.
emphasize the fact that I don't want to see or hear of anyone rushing into the reversal. Just because I said that it's way oversold doesn't mean you should be looking to get an entry long anytime soon. You have to, like, I know it's easy to kind of jump the gun on this and, you know, get in as soon as you can to a long. The second you see a green candle, it's tempting to go long because of how oversold it is, but I must strongly advise against that because as oversold as it may look, it can always go lower, and it typically does. Unless you have like a ton of capital that you can deploy to this and you have the experience and conviction to continue scaling in, it's just not worth it. It's not worth the stress, and it's not worth, potentially taking a huge loss. So, I mean, with this account, I have over $100,000 to burn. It was made off of a few trades in my other account, so I'm not really concerned about it. But these are the type of trades where I really thrive. I'm a contrarian trader by nature, and when I see everyone selling, I'm buying. That's just the way it goes. Okay, so here you can see we've got the first leg of the two-legged pullback. We have nice higher high, then we'll come back down, and if we can see a nice higher low like this, and I'll be looking to get in above this level here, which also happens to coincide with breaking above the 20 EMA, so almost a textbook setup here. If it can break above break out to a higher low. So if it can hold support above.
Order submitted.
Oh, whoops, I'm on the wrong account.
Order canceled. Order submitted.
Well, as you guys can see here, on the 2-minute chart, what it's going to look like here is either a nice green candle, then an inside bar, so an inside red candle or doji, and then we're hoping for another strong green candle with like opening at or near the high of the previous candle. So those are the textbook classical reversal setup. May not do that, which I'm totally fine with scaling in some more on my other account, but it's looking to be consolidating here at this level, so it's nearing 11 a.m. when the whales start to step in, usually around that time, so we'll see what happens.
Order canceled. Order submitted. Order submitted.
We also have this Fibonacci support level 2 here.
Order submitted. Order submitted.
But I'd say there's probably a 60% chance that it goes higher from here. I mean, it has dropped far. I mean, as you guys can see here on this market watch, I mean, it is way down there. Like, everything's down though. Crude oil's down. And I would have to say that there's probably a 60% chance that by 2, 3 p.m. probably that we see a retest up to break even, or at least near break even. I don't know if it's gonna make it up to break even, but there's an 80% chance that it's going to reverse. So those, I like those odds. Those odds are adequate for me to scale in and kind of just bite the bullet and take that initial loss and in favor of a potential huge winner. So no, it's not going to be one of those situations where you get like a 5R trade or even probably a 2R trade, but it will probably be 1-to-1 at least. I'm going to try to get 2-to-1, but yeah, so these types of mean reversion trades are not exactly mathematically like something that a lot of traders would find compelling. Usually traders are looking for like 5 times their risk or 3 times their risk on a trade like this, but given the fact that I'm letting it go against me, it goes against me, I'm adding more. So that kind of messes up the whole trader's equation a little bit, but it's kind of a balancing act. You have a trade-off here. So when there is a very high probability trade, your risk reward equation can be a little bit skewed, but if it's a lower probability trade, you want to minimize your risk as much as possible and maximize your reward. So the 5R trades are for trades that have only a slight edge, but when you have a huge edge and, let's say 80% probability, you can take a much greater risk to reward. Like you can have it skewed a lot more towards 1-to-1. So it's a trade-off. High probability trades, you can have greater risk. Lower probability trades, you need to have more controlled risk on that, and you can have a smaller reward. And also, just to clarify, I wasn't saying there was an 80% chance that it was going to go up like right now. I'm just saying probably by the end of the day, 80% chance. And to be honest with you, even if it doesn't, I know that price is going to be above 39.93 at some point, so it doesn't really matter how much it goes against me.
Order filled. Order filled. Order filled. Order submitted. Order filled. Order submitted. Order filled.
Okay, we've got another two-legged pullback attempt right here. And I think this one's going to be the one. I think this will be the one.
Order canceled. Order canceled. Order filled. Order filled. Order filled. Order filled. Order filled. Order filled. Order submitted. Order filled. Order filled. Order submitted.
There you have it, folks. That's your classic mean reversion for you. That's a trade where if you have the capital and you have the iron resolve, so the capital and the iron resolve,
Order
then
filled.
you can essentially make money 80% of the time. But that, I will say that 20% can be pretty painful, so you gotta know when to give up. But it's pretty rare that this does not work. So. But you got to be able to scale in, like really, really scale in. Scale in with buys when everyone else is selling is a lot easier said than done. So that's why I don't really recommend anyone do this. Like, do not do this. Unless you have, like, you know, a burner account where you can burn 100 grand, don't do it. Because most people will end up giving up or get rattled out or shaken out at some point along the way, and you know, that's when you get problems. For most people, it's better off to just wait for that price action setup for it to start making a higher high. But this is an example of a two-legged pullback that is not necessarily obvious. I mean, here's your first leg here. So actually, technically, so you got a consolidation right here, kind of, right? So you've got this consolidation, and then you have the first leg, then you have an inside bar. An inside bar, classic classic indicator for a potential reversal. Now, it's not something anyone should be relying on solely, but yeah. And then you've got the resumption here. So where someone could get in is right here, one tick above. So you could be just setting stop entries right here all the way along here. Now, I was focused on this trade, so I wasn't taking that, but yeah, I mean, that's a perfectly good risk-controlled setup that your average trader could get into. I think I was down about 20 grand or so. So my risk was around 20 grand, maybe 30, I don't know. But so I made back I think like 10 or so grand that I probably shouldn't have sold so quickly, to be honest with you. That was not exactly the best decision on my part, but I just wanted to lock it in as a profit, and then I've got 10 contracts as a runner, so it's all good. As you can see here, this 10 contracts was almost perfectly on the money where the reversal was. But I also was watching time and sales, and I have order flow, like I have a lifetime license on NinjaTrader 8, which is the platform that I use for trading. And I also have other order flow charts and stuff like that I use. So that kind of gives me a little bit of an insight into where the big money is going. I would recommend for anyone that also uses NinjaTrader or has access to a time and sales window, set the filter for ES to be anything above, like only show orders above 5 or 10. And then your block order size, you want to be like, I think I have mine set to like 30 contracts or something, 25, 30 contracts block order. So if you know where the big orders are, like flowing, then you kind of know where the smart money is. Because a lot of times the time and sales window will get congested with algorithmic trades, which aren't very, like, you don't really gain a lot of insight by watching algorithmic trades. But a lot of the manual orders are the larger sized orders. So like individual orders that are like 20, 25 contracts, like what I just had. That will give you a lot more insight into where the smart money is going. Okay, so it looks like we're pulling back here. I'm just gonna start getting out. I can always get back in.
Order filled. Order filled.
Just in case. I'll leave like
Order
I think
filled.
like 4 contracts, I guess.
I'm pretty happy with this trade. I might want to start just getting out, and then I can reassess the situation. I mean, this could very well be the extent of the reversal. I said there was an 80% chance that there's a reversal to some degree, but I did also say that there's a good chance that it tries to retest break even, which is still 45 points away. So this could come back to bite me, but yeah, I probably shouldn't have done that. So what I'll do is I'll set a stop loss.
Order submitted.
Before right here, and then what I'll also do is
Order submitted.
I will look to buy, add additional contracts to my position if it breaks above, like, let's say 39.94, 20, like, yeah. So that's what we'll do here.
Order submitted. Order submitted.
And also, I'm not saying that I'm a millionaire and I can afford to lose hundreds of thousands of dollars. It's just the fact that my confidence level is so high on these types of trades that it's worth it to me, which like may seem counterintuitive to a lot of people, but just a few of these trades and like you're pretty much set for the year. So this doesn't happen all the time, but when it does, I'm uh, I'm there to make the most of it.
Order filled.
And
Order submitted.
you guys can see how this played out here. I'm risking nothing. My risk is $0. if it breaks down below here, then I'm out. And out at break even, and I'm good to go with a $15,000 profit, I believe. So yeah, 15K, or hopefully I'll be able to double that potentially if it all goes as to plan and it gets a little bit closer up to break even. I don't expect it to break above break even, but very well could. I mean, this was such an extreme pullback off the open. I wouldn't be surprised. I mean, this is pretty wild. This does not happen too frequently, especially since the market hasn't been particularly bullish. It's coming off of. I mean, yes, it's a pullback. It was quite overbought, but typically on days where there's been quite a bit of volume from the bulls lately, so I expect them to step in force off of this move. So this is almost exactly like what happened yesterday. And so yesterday, broke out to a new high. I got in with a stop market order. And then what I actually ended up doing is I ended up buying with a limit. I don't know if that's going to happen yet.
Order filled.
Oops.
Order filled.
Okay, 15K on the day. All right, that's interesting. So, looks like we're reversing back down. And I should
Order
shift
canceled.
my strategy here. I could very easily have just pushed my stop. Market makers like to fuck me over following a nice big trade like I just made. It's not an atypical situation where you get a higher high followed by a lower low. That means the market is officially range bound. But we'll see what happens here. They like to push stops. I don't know what to tell you, you know? I knew a lot of people had stop losses below 39.8450, so it's what we call a liquidity vacuum. So it may resume back up, make a new higher high again. So that's what they're designed to do. Hey. Wow. I mean, if that wasn't predatory, I don't know what is, to be honest with you. So now either it's going to retest the high, and then make a lower high, confirming the failed reversal, because most reversals fail. I think it's like, I want to say 60% probably, 60, 70% will end up failing, and then the trend will resume. So, and I did say that in the beginning. I said it's most likely going to be just a quick scalp. And as a reversal, the reversal would probably just be a quick few points. I got more points than I even expected. And now we should be looking to go short again, probably. So.
Order submitted. Order submitted.
Actually, you know what? I'm going to trade a little bit smaller.
Order canceled.
Because this could just be traps for the rest of the day. Price action traps. There's been a lot of those lately, honestly.
Order submitted. Order canceled.
Just going to set another entry on my other account.
Order submitted.
All right, we'll see what happens. Very tricky. The reason why the statistic most reversals fail is not really that relevant or reliable is because yes, they do most of them do fail, majority of them do fail, but where they fail is what varies wildly. Typically, I mean, I'm personally I subscribe to the Austrian School of Economics, which states that the degree of upside is typically proportionate to the degree of downside. So there is a proportionate, perhaps not equal, uh, downside to every upside, upside to every downside. So it would be proportional, right? So if this is dropping down by, 60, 70 points, and then you look at like Fibonacci, 30% retracement, things like that, you can typically measure out what the average like reversal or retracement will be on that. So let's say it's 30%, 20-point retracement. We've already got that. So how much further up can it go? Can it retrace the entire thing? We can only wait and see and trade what's in front of us. So. Okay, so we just had another liquidity vacuum, big gap up, break down, new lower low. So the market's officially in a range. I'm